When a doctor is considering making a change to his or her malpractice coverage, the issue of tail nearly always comes up. Unless you are insured on an occurrence policy form, tail insurance is something you'll need to consider as you modify your coverage year by year. But let's say your current malpractice insurance just isn't meeting your needs anymore, and you want to shop around. Or perhaps you're leaving an employment arrangement or moving on from another job. What are your options going forward? Well, today we're going to talk about prior acts coverage, which makes it easy and affordable for you to move to a new carrier without having to buy tail insurance. Let's start the discussion. Stay tuned. Welcome to Malpractice Insights, the show dedicated to helping healthcare professionals understand medical malpractice insurance and providing you with the solutions you need so that you can get back to the work of practicing good medicine. My name is Jennifer Wiggins, CEO of Aegis Malpractice Solutions, and I'm so glad you've joined us today. All right, let's jump in. So what if I told you that you don't need to buy tail insurance if you want to change your malpractice coverage to a new company? Well, it's true most of the time. In most instances, a doctor does not need to buy tail insurance to switch their malpractice coverage to a new carrier. How does this work? Well, it works through a concept called prior acts coverage. Most malpractice insurance carriers offer prior acts or NOS coverage, which allows healthcare providers to carry forward their current policy retroactive date, simply transferring that liability to the new carrier for any potential claims for services rendered back to their first retroactive date. Now, to be sure, by continuing your coverage with this new insurance company, it does not negate the need for you to buy tail, it simply defers it. So you just don't have to buy it right now. If after a few years you find that you need to change your insurance again, then you can simply repeat the process. You can request prior acts coverage again and again all throughout your career. So let's unpack this a little bit more. What exactly is prior acts coverage? Well, to understand this concept, let's start by talking about how claims-made malpractice insurance works. Claims-made coverage triggers based on when a claim is made against a provider, as long as the incident occurred during the coverage period and an active policy is still in place. The doctor will be covered for that incident. So here's what that would look like. A doctor will buy a claims-made policy day one, and then renew the coverage every year until the time comes when she needs to cancel. But once she cancels the insurance, she's not done. A claims-made policy is really two policies in one. You have to carry the insurance while you're actively practicing, and then after you cancel it, you have to get a second policy, and this is called tail insurance. Your tail starts at your cancellation date, and then it extends your coverage into the future for any claims that may be made against you for services that you rendered all the way back to your policy retroactive date. Your retroactive date is the initial inception date of your claims-made policy. So, if you bought a claims-made malpractice insurance policy for the very first time on July 1st, 2022, then your retroactive date for your coverage is July 1st, 2022. As you renew that insurance policy year over year, the retroactive date stays the same, even though the policy period is moving forward. So, at your renewal, the new coverage period will be July 1st, 2023 to July 1st, 2024, with retroactive coverage back to July 1st, 2022. At the next renewal, the coverage period will be July 1st, 2024 to 2025, with retroactive coverage still back to July 1st of 22. Okay, so what exactly does this mean? It means that the insurance policy will cover you for any claims made against you in the current active policy period for patients that you've treated all the way back to that initial retroactive date. As you continue to renew your malpractice coverage year over year, the retroactive date will stay the same. So let's say that you now want to switch insurance carriers. Even if you move to a new insurance carrier, you can request that the new company continue this uninterrupted protection by requesting a claims-made policy that includes prior acts coverage. When you make the change to the new insurance company, they will use the same retroactive date on their policy, and then the new carrier will assume any liability for claims that may be made against you going forward for services that you rendered all the way back to that initial retro date. So, prior acts simply refers to covering your prior activities that were once insured by another company. Prior acts only affects claims-made policies. Occurrence coverage does not need prior acts coverage because of the nature of that insurance. Occurrence policies are triggered based on the occurrence date. So the insurance company that covered you at the time of the alleged incident is the company that will cover the claim. So there's no need for prior acts protection. Okay, so now we have a basic understanding of prior acts coverage. So how much does it cost? Well, if you remember back to our discussion of claims made versus occurrence, which we'll link for you here on the screen, and we'll also drop that down in the show notes in case you want to refer back to it later. Occurrence coverage is a little more expensive on an annual basis, but the rate is very stable. You'll essentially pay the same price every year for the duration of your policy period. The occurrence policy does not require tail insurance, so while you're paying a little more on an annual basis, you don't have to worry about the tail at the end. Claims-made coverage, on the other hand, starts low, but increases in price every year for about 5 years until it reaches the mature price. Because both the incident and the claim have to be filed during the coverage period, insurance companies have very little risk the first year that a policy is in force. That's why the first year premium for a claims-made policy is so much lower. But each year that the policy renews, the coverage period expands, and the insurance company's exposure to loss increases. So the rate begins to go up step by step. Once the policy reaches year 5, the risk of loss levels off, and the policy reaches a mature claims-made rate. Claims-made rates are based on the number of years you've carried the insurance since the initial inception date, or the retroactive date for your policy. So let's look at this in a table format to make things a little bit easier. So for the first year of coverage, the policy runs from July 1st, 2022 to July 1st, 2023, and the retroactive date is July 1st, 2022. The price for this first year of coverage is $6,235. The second year, the coverage dates are July 1st, 2023 to 2024, with the same retroactive date of July 1st, 2022. So we are 1 year past the inception date. The price for this year is $12,469. The third year, the coverage dates are July 1st, 2024 to 25, with that same retroactive date. So we are now 2 years past the inception date, and the price for this year is $16,367. The fourth year, the coverage dates are July 1st, 25 to 26, same retro date, and now we're 3 years past the inception date. The price for this year is $17,925. And the fifth year, the coverage dates are now July 1st, 2026 to 27, same retro date, and now we are 4 years past the inception date. The price for this mature policy is $19,484. So if you switched your insurance to a new carrier and you keep the same retroactive date, the math works out exactly the same. The new carrier will price your coverage based on the number of years since your retroactive date, since they are picking up your prior acts and assuming all of that liability for you going forward. If you happen to switch midterm or on a date that doesn't exactly align with your retroactive day and month, the new insurance carrier will simply prorate the price, essentially blending the rate between the years depending on how much coverage they're picking up. So let's do some more examples. Let's say that your policy has a retroactive date of January 1st, 2001, and you switch to a new carrier effective March 1st, 2023. What will your rate be? Well, they will charge you the 5th year rate, which is the mature price for the policy. And it doesn't cost you any more than it would normally because after 5 years, the premium is considered stable. And it's the same risk to them as it was to your prior carrier. Here's another example. Let's say that your policy has a retroactive date of February 5th, 2021, and you switch to a new carrier effective July 1st, 2023. What will your rate be? Well, let's go back to our grid. If we look at the initial coverage, the policy dates would have been February 5th, 21 to 22 for year 1, February 5th, 22 to 23 for year 2, February 5th, 23 to 24 for year 3, and now you're switching effective July 1st, 2023, which actually falls right in the middle of year 3. So the new carrier will prorate the price and charge you a premium that is between the year 2 rate and the year 3 rate. Does that make sense? So when it comes to prior acts or nose coverage, it doesn't cost you any more than a normal policy would. The new carrier simply picks up the same retroactive date and then charges you the equivalent price according to their rate tables. If you have any questions on this topic or you want to make sure that you're covered appropriately, click the link in the description box below where you can connect with us via phone, email, or chat today. And if you're listening, please visit us online at aegismalpractice.com. That's AEGIS malpractice.com. And of course, if you haven't done so already, please don't forget to give us a like and a follow. And I'd really love your feedback if you could please also leave me a review. Your support really does help us to reach more people, and we're so grateful for your clicks and your kind words. This is Jennifer Wiggins. Thanks for joining us.